Hey, what's going on, everyone? Welcome to another episode of About Abroad, where it's my job to introduce you to people who have built amazing lives for themselves in various foreign corners of the globe. We're talking with expats and thought leaders about moving abroad, remote work, visas, and all the fun and practical knowledge that you need to know to follow in their footsteps. If you've ever dreamed of making a life for yourself overseas, maybe working remotely or embracing long-term travel, retiring or studying abroad, or even just taking a peek inside life beyond your borders, you've landed in the right place. This episode is brought to you by my friends over at Make My Move. Many of you are already aware that there are places around the world that want to attract remote workers to come and live there. But did you know that some of them will actually pay you to do so? Yeah, that's right. And aside from the cash incentives these towns might offer you, there are other incredible benefits ranging from free babysitting to concert tickets and even free healthcare. These places also make a terrific home base for digital nomads with super fast internet, friendly neighbors, and affordability and close proximity to major airports. In fact, the remote workers who relocate typically save around $20,000 per year by moving to these new communities. But perhaps most importantly, the locals in those communities are truly excited to welcome new movers in and get them plugged into the local network. The problem is, where do you start? But luckily, Make My Move is your one-stop shop for all things related to these towns. Since 2021, they've helped more than 1,000 remote workers and their families relocate, and through their platform, you can explore all the places that are offering incentives to come and live there, get personalized help to find the place that's right for you, connect with the locals, super important, and access support services to actually make the move a reality. Take advantage of all the benefits that come with your location independence by checking out makemymove.com via the link in the show notes. My guest today is my new friend Paolo, who joins me from Italy, a country that obviously needs no introduction and is one of those places in the world that almost everybody knows, from the gastronomy, the history, the beautiful landscapes that exist from the Alps all the way down to the beaches of Sicily. There is a ton to love about Italy, but one of the things that it is sort of notoriously known for in a less positive light are the taxes. It's one of the highest taxed countries in the world, and for expats who are earning an income from abroad, it has not seemed like a very attractive place to move to, but this has changed dramatically with this benefit, quote unquote, that we've defined it as during this conversation, that will actually allow you to reduce your taxable income by up to 90%, making only 10% of your income actually taxable in Italy. So we dive into all of that during this discussion and really break it down. Paolo's an expert on this subject, and so he had a ton of knowledge to share. I do want to say that this is all just information for entertainment purposes, so please do your own research, talk to an expert, use this as information just to plant a seed, but you need to dive into the details with a professional before you actually apply it. So caveat out of the way. Hope you all enjoy this one. Please help me in welcoming Paolo to About Abroad. I'm actually really enjoying doing more interviews with people in Europe this season. In previous seasons, I was trying to get out into other parts of the world, and the last handful have been with people in these time zones. So I'm really enjoying, we don't have to tackle those barriers these days. You there, Paolo? We connected?
Yeah, I'm here.
Yeah. Okay. All right, cool. All right. So we're getting started then. Paolo, welcome to About Abroad. I've been so excited for this conversation, and good to see you again.
Thank you for having me. Do I have to say hello or ciao? You pick.
Well, today we're talking about Italy, so I feel more comfortable with ciao. It feels right.
Okay, but let's stick with English. I hope you don't mind.
All right. Yeah. I mean, that's not just better for me. I'd like to think that might be better for the audience. This is generally in English, though. Italian is like that language that I feel like, at least for me, it's like a language that I have to learn on some level at some point. It just sounds too pretty not to.
Yeah, but it's pretty unfair because when you have to learn Italian, what I like to say, it's like Chinese. It takes 10 times as effort compared to English, for example. So
really,
it's pretty difficult.
Do you think that's true for people people who have learned other Romance languages like Spanish or French or something? Is it eased a bit?
People from Spain find it less difficult to learn, but simply because there is a lot of things in common.
Yeah.
But compared to, I would say, French and of course Chinese, American, whatever, yes, you have to go the extra mile.
All right. it might be worth it for me. It's on my bucket list at some point. But for now, it stops at like, ciao and arrivederci and the pleasantries. And I can order pasta pretty good too. I've like that's my vice. So
Then you can survive here.
yeah, exactly. Where are you based exactly?
We are based in Verona, a small city in the north.
Lovely city. I spent just a little bit of time there, maybe 4 or 5 days once, but I had a fantastic time, and I feel like it flies a little bit under the radar compared to some of the major cities that people might think of going to. Do you have that perception as well, or has that changed?
Well, I have to confirm that it's not just a feeling. Every single time, prospects and experts from all over the place ask me some suggestions, some cities that I have in mind to recommend, I like to say, yes, Verona is a nice place to say, yeah, I heard about it, but I would prefer X, Y, and Z. So no one picks Verona. They like to take a visit just to, to touch Giulietta's breast. You know how it works for the good luck. But then they leave, so I'm all alone here.
It's the I mean, touching on that, it's the that's where Romeo and Juliet was staged, correct? Or written?
Yeah,
or
so let's say that if you're looking for a new girlfriend or someone to take you for life, that's something that you have to try for at least once. And tell me if it works, by the way.
Yeah.
It didn't work for me.
Awesome. Yeah. I really enjoy it. I will say like one thing about Verona, and actually I've seen quite a bit of Italy, and I've over the years, like when I first started traveling, I really loved going, you just want to check off like you want to go see the Colosseum in Rome, and in Paris, you want to go see the Eiffel Tower. And like, that's very, very cool. And I'm not diminishing those things at all. But like over time, what I really enjoy now is going to those like maybe second and third tier cities that are, that do fly a little bit under the radar, and they have a little bit more authenticity. Like you don't feel like you're packed in amongst a bunch of other tourists, and there might be tourist attractions to see, but it's not the same vibe where you're like obviously just in a world of tourism and not living amongst the locals. And I got that feeling from Verona, like very much so. I felt like I was eating at the osterias with people who actually eat at the osteria every day, and I really, really loved that.
And don't forget the red wine.
Yeah,
24/7.
It goes without saying. Is it Verona that's the home to like the most osterias per capita or something like that?
Yeah, we are on the top of the list.
Yeah, okay.
Or at least we were in 2021. I'm not updated about it.
Okay, and it's like osteria, trattoria, and ristorante, right? Like kind of like the hierarchy.
Yeah, that's the workflow, but it really depends if you're thirsty or if you're hungry. But I would suggest to start with, we call it appetizer, but indeed we don't eat anything, we just drink. We start drinking at 6, and then we start sitting at the table at 8:30 p.m. and that's it.
Yeah, okay.
You enjoy I would say that, back to what you just said, I think that in Italy in general is a very various collection of different lifestyle you can find around. A lot of people pick South because it's more slow about the quality of living and the speed of the people in general. Verona is a nice place in the middle, but if I had to cheat Verona for someone else, I would probably pick Florence.
Yeah, another pretty amazing city. Yeah, I don't think you can go wrong. And there is like a big distinction between the North and the South. I gather like it feels, obviously geographically it's different. But like, I think people from outside of Italy or maybe outside of Europe may not realize how young of a country Italy is as we know it today. And realize that there are these like distinct differences. I mean, language, culture, obviously geography, food. It changes quite a bit, and it's a very long country. So like geographically, the north where you have the Alps and the south where you have Sicily, and couldn't be much different in that regard. But yeah, I mean, I think that might be something that people don't realize, because we think we know a lot about Italy. We know about Rome, and we know about the Amalfi Coast, and I think people generally think like, okay, I got a pretty good feel for what's going on in Italy, but it's much more diverse than might meet the eye at first.
Well, 100% agree with you. Let's say that if the north is 1 and the south is 10, In pictures in the movies, you see just a 5, an average situation. The quality of living and also the healthcare system you can find in the South is not that good as you may think. So it really depends on your age, about your expectations, how long you're planning to stay here. There are a lot of things that you have to play with when you consider Italy.
Yeah, it's good to know. Well, that kind of brings me to the reason that we're having this discussion today, because I learned about a rule that, or a rule, I don't know if that's the right word. I'm going to let you describe it all. But I learned about some tax advantages for a lot of the people that listen to this type of show would be interested in. And I was kind of shocked that I didn't know about this. Like, I just came across it through Kathy's Wanderer's Wealth tax course, which I always recommend to people. So I'm very thankful for her to for bringing us together. And so I'm gonna let you describe it a little bit more, but I would love to start with, just for some context for people as we're jumping into this. This is a rule that seems pretty tax advantageous for people who, like me, like a lot of you make an income from somewhere else and you're looking to move to another country. Italy sounds pretty spectacular. And oh yeah, by the way, there's some pretty awesome tax advantages that make it even more attractive, perhaps. The truth is, though, is that I only know the very basics. Like, I literally reached out to Paolo and was like, hey, I'm interested in learning more about this. We could have this conversation in private, or we could have this in front of my audience who might have the same questions. So I'm coming from the same place that you all are. And so we'll start from the very bottom. Paolo, you know a little bit about what I'm talking about. Before we dive into the details, could you kind of tell me sort of an overview of what we're about to get into?
Okay, let's say that I would like to put some romance on the table, if you don't mind.
Please.
Italy wants to attract new people, and of course, it's like dating. When you have the first date with someone, you want to give her, because I'm a man, okay, I'm talking from a man point of view, you want to give her a reason to stay. And a reason to stay is some benefits, some trade-off. And I think taxes is a very common topic that attracts a lot of people and basically makes you stay if you have some advantages, some real advantages. So in a nutshell, let's say, okay, if you're committed to stay here in Italy, and by the way, we'll deep dive about what stay means, okay, because it's all about tax residency. I'm going to give you something, not something for free. Let's say a discount on taxes that you should have paid if you move to Italy. And this benefit lasts for, let's say, 5 years with the opportunity to get the extension to 10 years from your buyer. And it's not a bad thing. I have to say, personally, I find it very unfair because it's just for brand new people coming here, not for locals. But, life is unfair. Don't hate the player, hate the game. That's what they say, right?
You're going to be pulled over to go live in Portugal, and all the Portuguese are going to move over to Italy and just trade places.
Yeah, I would love that. That. Taking notes about this project.
Absolutely. And so, generally speaking, who are we talking to here? Like, what would be the type of person who would potentially be interested in this?
Anyone receiving some employment income, anyone trying to find a new job opportunity here in Italy as an employer for an Italian entity or a foreign branch, whatever, or still if you are an independent contractor, or if you want to start a business. So I would say as long as you have some personal source of income, not passive income, okay, not such rental income or dividends, this benefit could be a good fit for you.
Okay. So you want to actually be working, not like, for example, a retiree with a pension.
Yeah, if you're a retiree, there is another benefit. It's called 7%, but I don't want to spoil anything yet.
Okay. All right. We'll get there. I think that passive versus non-passive thing is important to clearly define, though, because I think a lot of countries actually have the opposite, where they're looking for people with passive income, and you have to prove that it's passive. So we're distinguishing here that that's not exactly what Italy's looking for.
Yeah, that's a very good point. And by the way, passive income, it's probably the most unfair tax topic that we can deal with, because here we have a flat rate, 26%, period.
Wait, so explain that.
Okay, just to get off topic, just a few seconds. Here in Italy, I don't want to deep dive about international tax agreements, but here we have a flat rate of 26% on passive income in general. That's a lot of money compared to other countries. So this is why I suggest or I recommend people moving to Italy with impressive capital gains or impressive portfolios to take a look around
Good
before
to know.
moving.
Oh, good. Okay. That is very helpful. A good distinguishing point. So a lot of people I think might fall into this category where they are a freelancer. They run their own, they're a marketing specialist. They have their own little agency, or they do work for agencies, or they're perhaps a full-time employee, but for a company that's fully remote now, or allows them to choose where they want to live and relocate. So for those people, digital nomad types, for example, those types of people would be potentially interested in something like this, correct?
100%. But we just few things to add on the check-in list before you move to Italy. Because remember, there is a place that you're going to and there is a place that you're living.
Good point.
So what happens, for example, if you're working as an employer, as an employee, and your employer holds some taxes on your payslip. What happens if you still have, give me this option, this opportunity to have some strings attached with another country? You don't have to just play with one country only, you have to play with two countries at the same tax table. So you have to be wise before moving because you forget about the past, you get enthusiastic about the future, you know what I mean?
Yeah, absolutely. I mean, especially like, people like myself, like I'm originally from the US. And so, yay, America, I get to deal with the IRS no matter where I live. And as a bonus, you get to work with the two versions of the IRS every year when you live in a foreign country by working with your new tax residency as well. So American friends, be prepared for that. And it's not as terrible as it seems. I think the surface level makes it seem a lot worse than it is, but it is a thing to consider.
Yeah, always. When you plan something, you have to go into details because we're talking about your future. So
Yeah.
what happens if something goes wrong? Of course, there is always a way back, but it could be painful. So planning, that's the best thing that you can do. Plan and enjoy the future.
This is why we're having this conversation, so you can plan ahead. Not everyone does, and not everyone has. I know that for sure. Talk to people all the time who have dipped their toe in this water and chased some advantageous sounding deal and then not prepared. Like the classic one is an American that moves to another country and thinks, oh, I don't have to pay taxes here, like in a tax haven. And then they don't save any tax money for 3 or 4 years. And the IRS comes after them and says, hey, you were supposed to be paying taxes this whole time. What? I wasn't living there. Doesn't matter. So this is just one version of that story, and it can go a lot of different ways.
Yeah, every country has its own regulations. And this is why learning is the first step, of course, from my point of view, because I'm talking about as a father, as a husband, I like to plan. I like to, first of all, understand what happens when.
Yeah.
This is all I like to think for my clients and even for myself.
One of the things that I loved that you told me early on in our conversation was that, for me, these conversations are all about knowledge sharing. It's not even about getting new clients or revenue or anything like that. It's like, let's just get all this information out there because it's so ambiguous. I mean, most of us are not tax professionals, nor visa professionals, bureaucratic professionals. And so it really is nice when someone will break it down for the lay people and and share with us how it looks behind the curtains. So let's dive in a little deeper. So the headline that I read that caught my eyes, and then I want you to break this down, debunk it for me, or tell me that it's just correct, and we'll just move on. But what I read was, if you fall into this category of people that we've already identified as sort of the target market for this, and you move to Italy, and you have the ability to do so, which I think is a good distinguishing thing here. We're not talking about a visa that allows you the opportunity to come move here. We're talking about if you have the opportunity, then this is a tax advantageous opportunity that you may be able to take advantage of. But if that's the case, then you could potentially reduce your taxable income by 70 to 90%. Is that correct?
I would say almost.
Okay, cool.
Because the devil is in the details. It really depends on the kind of personal income that we are talking about. Let's consider a couple of case studies. If I'm getting too complicated, feel free to let me know. Okay, I hear it a lot of times. I don't get offended anymore. The case study number one is you work as a contractor, as a freelancer. You don't have to pay any withholding tax. You don't have to file your taxes anymore in your home country. In this case, the benefit is real. If you make 100,000, you pay taxes just on the 10,000 or 30,000. So basically, you get a real discount on the tax basis. Conversely, if you're working as, let's say, as an employee for a foreign company or for an Italian branch of a foreign company, very often, more likely, they apply the so-called withholding taxes. And a lot of employees know what I'm talking about. You receive the net, clearly not the gross. So what happens is they already applied some taxes on the gross, and here in Italy, you should pay Italian taxes on the same gross with the deduction. So best case, you will not pay a dime as difference, but still there are some taxes to be paid in the other country, the country of origin. And this is a huge distinction. Plus, I know a lot of people will hate me about this. I don't mind. I have to be 100% upfront with you. We have to play with the so hated pension contributions or social security. A lot of people forget about it. If you're an employee, more likely you already have a pension account abroad or your employer is making the payment on your behalf. Here in Italy, you have to start from scratch.
Is it okay time to ask a question on that?
Of course.
Okay.
Be my guest.
All right. Great. Is it correct to say, like, the pension thing is an interesting thing? In the US, we would call it like our Social Security, which comes to like about 14% of our income is paid to Social Security. Sometimes that's split between the employer and the employee if you're a full-time, like what we would call a W-2 employee. But if you're a contractor, freelancer, self-employed, then you pay the whole roughly 14% to pay into your pension. How does that work? Like, using kind of some of those same generalities, like how does that work if I'm one of those people in Italy?
Are you sure you want to know the answer?
I'm not sure, honestly. Like, I don't want to ruin this whole thing, but
Okay.
It sounds like La Dolce Vita until we get into the details, right?
Okay, let's use the same case studies as you just named, the W-2 and the 1099 as a contractor. Okay, stick with the US. If you get a W-2, more likely you already had some social security payments made in the other country, so you don't have to contribute here in Italy. That's a very huge benefit for those considering this option. On the other side, if you get a 1099, you have to pay pension contributions or social security on your behalf by yourself. Very often, I'm using the words "it depends" a lot during this conversation because we go into details, but it may happen for you to get the benefit of getting, let's say, an exemption to the INPS contributions here in Italy. INPS is the name of the contributions entity that you have to pay your contributions to for your pension or retirement. So, worst case, you have to pay 28% of your gross.
Ooh, God, you better have a sweet retirement for 28%.
I told you. Average case, you will pay the 28% on the reduced tax basis. Remember the 10% on the 30%, applying the tax benefit that we were talking about a few moments ago. Best case ever, you get the exemption for the pension contributions here in Italy. You just pay your contributions or social security in your home country.
Got it. Okay. So that the idea there is that you shouldn't have to pay into two pension systems. Realistically, it would not be wrong to expect that would be the outcome. It won't always be. It could be, but
well,
it
yes,
depends.
yes, it depends because what happens? I like to think like this. Okay, what happens if I start paying my contributions to Italy because it's more advantageous, or because I like to contribute, or because I find it more ethical? Okay, I don't mind the reason why. But what happens if you stop working from here after 5 years and you go back to your home country, or you change location? What happens to those 5 years of contributions? More likely you will lose the whole amount. So you have to look ahead and plan your future 20 to 50 years from now. I know it's pretty weird because a lot of people don't know what's coming next, but you have to play with numbers a little bit.
Yeah, it's a really interesting point, right? Like I don't think, a lot of people glamorize the lifestyle of people who are living abroad and nomading around and stuff. But there's a lot of brain power used on things like this that are just like, if you're living in your home country, by the time you're 25, you probably know how to set up a bank account, pay your taxes, get a home loan, buy a car, get insurance. You certainly don't have to deal with visas and double taxation treaties and things like this. And retirement is another one of those things. Like when you start thinking about your pension and which country you're paying into, and is it advantageous for me to, like, am I committing to Italy for the next 30 years or am I just going to be here for 5, but oh yeah, by the way, I got to pay into this pension fund, which means I'm not paying into the other one. Like you end up having to think through all these things, and there's no black and white, black or white clear answer here. It's there's a lot of nuance involved, but it takes a lot of brain power. I mean, you find yourself thinking about these things and you're going, this would just be easy and automatic for me if I just stayed home.
Well, I heard a client of mine give me a very good metaphor, and basically she was trying to give me his point of view regarding Italian taxes, but let's say tax planning in general. And he said I was really over the top about this picture about myself moving to Italy, working from Italy. And after a few months of planning and research and getting information, I'm feeling like once that I'm moving there, I will be exhausted. I will not be able to be creative anymore because, it took all of my energy and effort just to prepare.
Yeah.
This is the last thing that I want for clients, but just for expats in general.
Yeah. I felt a bit of this pain before as well. And it is a very real thing. Like I say often, like it's not for the faint of heart. Like if you want to just go travel and live somewhere for 3 months, or if you can stay for 6 or something and just enjoy being there, like that's one thing. When you actually like commit to making the move, there's just so many things that come into play that you need to start mapping out far off into the future, and you often don't know. So that it's helpful to have these discussions and just have as much information that you possibly can to make informed decisions. I think is the best you can do. And then I'm always a big fan of hiring people that know the situation better than me, because outsource your weaknesses, and this is certainly a weakness.
Okay, then I have a question for you. How do you know if you're hiring the good professional then in any matter? How do you know that?
Generally, if they've been on the About Abroad podcast, I know that they're really good. So that's my first criteria. But I might be biased there. That's just me. No, I mean, that's a great question. I'm a big like people relationships person. So when I know someone that I respect in a adjacent space who connects me to that person, in this case, for example, like I know Kathy is an awesome tax professional and helps a lot of people in situations like mine. She connected me with you, and I have instant credibility. You can do a little bit of research to see what reviews are out there and things like that. But yeah, I don't know if you have like a better suggestion. You may, and that would be helpful.
Well, I would say that I don't want to take full credit what I'm about to say, but this is what we stand for as a tax firm, as professionals. We want to educate people, not just because, we want to get clients. You will never hear something like, okay, click on the bottom, you will find a course, or click on this, you will get, this benefit or this discount. We try to educate people, not just because we want to give some clarity about taxes in Italy, but because once you have, a clear picture, a clear overview about the tax system, it's very easy for you to touch base with any kind of tax professional and ask him or ask her some confirmation about what you just heard. It minimizes the risk for you to getting a bad advice because you really have some knowledge behind you that helps you. It's like picking a pair of shoes. The more you try, the more comfortable you will be once you make the best decision.
Mm-hmm. Absolutely. Yeah. And I think there's so much to be said for, in the cases like this, being able to speak to a human, as weird as that sounds to say out loud, like actually being able to pick up the phone and just, schedule a consultation and work through some of the gray areas. Excuse me. Because every situation is unique. I mean, we've barely scratched the surface here, and we've already found so many it depends, right? And when you're dealing with taxes in 200 countries around the world and taxation treaties and things like this, I mean, there's no other space where there's probably more room for nuance. So that's super important for me, is like, I want to be able to talk to a human in any of these things.
Conversely, I would like to give you something that probably you will not find around. People like to overthink. I don't know the reason why I had this bad issue on myself the years past, but a lot of expats assume that they have a complicated situation. Even at the first meet, okay, you just schedule the Zoom call with them and they start with, I have this very complicated situation for this reason and blah, blah, blah. So the biggest advice here is stop overthinking. Just explain things that they are and let someone else say if you have a complicated situation.
We'll be right back to the show after a quick break for a note from our sponsor. This episode is brought to you by my good friends over at Greenback Tax, the very best in U.S. expat tax services and the company that I've trusted to handle my tax situation since I moved abroad in 2015. Greenback is 100% focused on helping U.S. expats with their taxes, and to date, they've filed almost 50,000 returns for nearly 15,000 happy customers like me living in more than 200 different countries around the world. After 7 years working together, I can say with confidence that they make one of the most painful parts of life abroad an absolute breeze with their automated systems that store all of your information for you to make tax filing easy year after year, and the friendly advisors who you actually have a working relationship with. There are no robots over at Greenback. Best of all, everyone is a CPA or enrolled agent with a specialty in U.S. expat taxes, which means they know exactly how to help you take advantage of some incredible tax breaks because you're living abroad, not in spite of it. As of January 23rd, tax season has officially arrived, so it's time to get started. Learn more about Greenback Tax today by visiting greenbacktaxservices.com via the link in the show notes. Hey guys, if you're still around and enjoying this episode, then I think you might actually like our once a month newsletter as well. If you'd like to sign up, just open up the show notes of the episode you're currently listening to, scroll down, and look for aboutabroad.com/newsletter. It takes about 30 seconds to sign up. It's a fantastic way to support the show, and I think you'll be pleased with the information that we provide every month as well. Thanks a lot for listening. Hope you enjoy the rest of the episode. Okay, so let's come back to your recent, speaking of case studies, like the case studies that you went through. So a few kind of like clarifying questions, and then I would actually like to use myself with some dummy numbers to kind of go through, like, generally speaking, what this might look like. But one of the main questions is there's this 10 to 30%, which is a big range that you mentioned. So tell us a little bit more about, what falls under 10, what falls under 30, and what people should know about that.
Okay, we are talking about 10 and 30%. This is the net of your tax liability. Okay, just to give some clarity.
And to clarify, let's maybe even further define that for anybody that's like, wait, what does that mean?
Okay, sorry. I had to adjust a little bit for the topic. Let's say that I'm talking about gross numbers, okay? You make 100,000. Of course, I'm wishing everyone to make 10 times as much, but let's take with round numbers. It facilitates the math. If you make 100,000, if you move to Italy, you should pay, listen carefully, 23 to 43% on the progressive basis. It's a lot of money. Mm-hmm. And by the way, this is what actually we're paying.
And on top of that, you have the pension numbers that you rolled over. You mentioned earlier.
Yeah,
correct?
Of course.
Yeah, of course. So you're talking combining those two, potentially over 50, 60% in total with withholdings from your income.
Exactly. You're better than me at doing the math, by the way. Yeah. It's pretty surprising. I should be the accountant here.
Sorry, I'm stealing your thunder. I was showing off.
No problem. Right. At least fake it, please. Yeah. Okay. If you move to Italy and you're eligible for this called Regime Impatriati, that's the Italian name, or Impatriate Regime, however you want to call it, it's given to you a discount on the tax basis. And it's based on what? Based on where you're going to move. Let's say if you move into the north, it's 70% off. So your taxes are calculated on just 30% of your income, just on the 30,000. If you move in the south, I'm not talking about small villages in the middle of nowhere, okay? It could be even Bari, Palermo, or some big cities. you get 90% off, 90.
Wow.
Okay, so your taxable income is just 10% for 5 years. And then I find it pretty tricky to explain to couples, because when I say you have to choose between buying a property or having a kid, they look at me in a weird way, like, don't tell me what I have to do. Okay, I respect that. But let's say in general, there are a couple of ways for you to get the extension to 5 years plus, buying a property or having a kid, or already having a kid and you move to Italy. So from 5 to 10 years. Let's do the math and see how much you can save.
Okay. All right. So to be like very, very clear about it, if I'm there for 5 years, I move to Palermo. I make 100,000 a year, but I've decided I'm going to move to Palermo. I'm going to be taxed on the 10%, meaning that my income as the government sees it is 10,000, or they apply the progressive tax rate on the 100,000 to the 10%.
You always apply the progressive rates on the net amounts.
Okay.
So on 1/10 or in general. But let's float some numbers, okay?
Yeah.
If you move to Italy and you make 100,000, I don't know if people can see me right now, but I'm looking down because I'm taking notes like a nerd. I don't mind. You should pay something like, I'm not talking about pension contributions, okay? I'm talking just about personal income taxes. You should pay around 43 to 45,000 against the 100,000.
Right.
If you move in the south and you're eligible for this benefit, or you want to be eligible for this benefit, because remember, it's an option, it's a choice that you can make. It's 100% up to you. You pay around 3,000, so you save 40,000 per year. If you multiply that for 5 years, it's around 200,000.
Decent savings. There's a lot you can do with 200,000.
Yeah, I have a few suggestions.
And so if the pension thing adds a lot of it depends to it, because this depends a lot on your various country situations. But let's just say, let's take the two scenarios where if you're, let's say you're coming from the U.S. and you're continuing to pay your U.S. contributions, your 14% for a freelancer to your Social Security. Then on top of, so you would have your 3,000 or 4,000 in Sicily that you would pay in income taxes, plus your 14% that you would pay back to the U.S. And if you can exclude the pension situation in Italy because you're paying to the U.S., you would kind of combine those two numbers to come to around 17,000 for your total.
Yeah, but also we have to play with personal income taxes, because if you already paid something in the 1040, because you just mentioned the US, if you already file your taxes in the US, you already paid taxes in the US, you can offset personal income taxes paid there against the total bill to pay here. So I would say that total bill will be zero here in Italy, because the taxes paid in the US can overcover the tax bill here in Italy.
Very interesting. Yes, that's correct. Okay, cool. And then if you can't, like, let's say you end up having to pay into the pension fund, you stop paying in the U.S. or your home country, but you're going to have to pay into pension in Italy. Then what does that look like? Rough numbers.
Okay, rough numbers. If you're lucky, you would pay something like 2,500 in Italy, because it's 28% of the 10,000 with some, deductions. Or worst case, you should pay the 28 grand, because we apply the rate on the 100,000.
And that's a question mark.
Yeah, that's a big question mark. And once again, details make the difference.
Okay. Yeah. That would be a big detail to know.
I know. A lot of people forget about it. They say, okay, tell me what my tax liability will look like. And then once the call is almost over, I come up with, what about your Social Security? And say, oh, I forgot about it.
Yeah. You know what I think a lot of us do, and like non-tax people, because I fall into this category. I just get my tax bill. Like, I don't separate out personal income, Social Security. It's like, this is what the government makes me pay. and we don't know what even the broad buckets are. I mean, I had a conversation with someone recently who's been living abroad out of the US for 10 years. and didn't know anything about the foreign earned income tax exclusion, didn't know about paying Social Security back to the US, didn't know she was supposed to keep paying her taxes in the US this whole time. Like this was all just like mind blowing to her. Like, what? I never learned about any of this stuff. I just moved abroad and just started living there and never thought about it again. So I think a lot of us are like really, really uneducated on these things. And we don't even think down to that level, like, but separating out, it's taxes. It's all one big bucket to us.
Well, I suggest, I don't know if it relevant to the topic, but I will suggest all the people that are listening right now to read a book. It's called The Compound Effect. If you start working on the future in the right way, even just one step a day, it will change everything 20 years from now. It's all about planning. If you take a look at the tax bill, if you try to understand at least one information a day, in 1 year, you'll be able to understand where your taxes go and how to save your taxes.
It's unbelievably powerful. And I'm far from any expert, but I have dedicated some time to understanding this. And it has, like, I don't mind sharing. I mean, this year it saved me, like, that education led to a direct 5-figure savings. Knowing to ask the right questions, knowing to move some things around in a completely, totally legal, like the information is there to help you. It's just about going out to get the information, applying it directly. So yeah, that compounding effect is I haven't read the book. I will, but that compounding effect of just little bits of information is extremely helpful.
Yeah, don't get me wrong. I enjoy Netflix and Amazon Prime. Okay, but when it deals with taxes, I changed it, my mindset once that I became a father and a husband. But you have to think that your future is part of what you're doing right now.
Yeah.
You must take 100% full responsibility of that, and taxes are part of that, but just part of that, not everything.
Totally. So on this idea of the pension thing, that would be something for me if I was considering moving to Italy right now. I would think like, okay, I kind of need to know if I'm going to have to pay the 28% into the pension fund or not. Like that's a giant number. Is there any way to figure that out before pulling the trigger on making the move? Or is it like retrospective? You kind of get told later.
Okay. When you go to the doctor because you feel pain on your back, do they come up with you have or you don't have to get a surgery right away, or it takes a time for them to understand if it's the case? Same here. Let's say that a good symptom in a bad way, okay, in a good way, is having a foreign pension account active. So it means that it's 2023 nowadays. You have to make you have to show that you contributed the last time in the second half of 2022. So if you have an active pension account, more likely you have a chance to ask for the exemption. I'm not saying you will get it, okay?
Got it. Okay. Is that process painful? Is it like a particularly cumbersome one, or is it a filing of the paper and you figure it out?
If you know how to speak the bureaucracy language here in Italy, it's not painful at all.
I'm talking about you. Like when I moved to Italy, I'm calling you and I'm like, Paolo, how do we do this? I really don't want to pay 28% into a pension fund especially if I continue having to pay 14% in the US. So help me. Are we looking at like months and years or days and weeks or what? I know it probably depends.
Well, it depends not just on the communication or the lack of communication that you may incur with the Italian authorities. It all depends on the kind of information that you deliver. I'm going to give an example. Let's say that I suppose that you are eligible for the extension, okay, for the exemption, and you move forward pretending that they already know. They don't know. You have to move first. You have to be really upfront. You have to move towards them. So first step is getting in touch with them and be compliant with the requirements. So if you already know that you have to show an active pension account, don't just send a simple email. Attach everything ready to prove that you have the requirements. And then let's say set a deadline. Something like, if you don't receive any feedback a couple of weeks from now, I feel entitled to move X, Y, and Z. Something like this. You have to try to anticipate the bureaucracy in Italy because it takes very, very long to get an official reply.
Understood. Okay, great. Yeah, this is really helpful. I mean, I'm getting a very clear picture of what it can look like, and understanding that there's gray areas and it's not always going to apply evenly to everyone. Would you be willing to say, generally speaking, it goes one way or the other? Like, if let's use me as an example. I've been paying into the Social Security system in the U.S. for 20 years. And so I have like a consistent track record. I file my taxes there. I can prove that, there's X in that account. And I fit all the criteria otherwise. And now I want to move to Florence. So I'm settling there in Florence. And would you advise a client, like, probably this is going to work out for you where you can avoid this, or actually probably not, or literally it's a coin flip, I have no idea?
Well, before giving you an answer, I will give an example. Let's say that here in Italy, you have the opportunity to ask officially for, let's say, a reply from the salary review agency or from the INPS, the pension account, in order to get some confirmation about your idea. Okay, let's say that you think you're eligible and you're asking for some confirmation. It takes 3 months, you get a reply, you take a read, and they say, okay, you're eligible, some confirmation. But if you go into details, if you take a read about the last 3 sentences of each official reply that you may get, they say, this answer is based on information you provided. We keep for ourselves the right to shake you a little bit in the future if we have a feeling that we missed something or anything changed in your life. So the lesson here is, it doesn't matter the kind of reply that you get. You have to prepare always for the worst case study.
Yeah.
Good point. Back to your question, I would say 98% yes, but it's not about your past. It's about your future.
Yeah.
What are you doing for a living? What kind of clients you're dealing with? Where the center of your life is? How are you going to get paid? Through an Italian bank account, through a foreign bank account? How long are you planning to stay here? Do you have any Italian relatives? So a lot of follow-up questions that can decide if you're going to win or if you're going to lose about this request.
Makes sense. And I get the impression, from talking with you and some others that, like Portugal, we've joked about Portugal earlier because they've become kind of world famous for obviously wanting to attract foreigners to come and invest in the economy and buy homes. And, the prototypical person that we're talking about here that would take advantage of that. And it's become the number one place in the world for expats and nomads to move to for that reason. And I get the impression, that's changing a little bit. That's an interesting dynamic because Portugal's softening on that a little bit, or hardening might be the better way to put it. But I get the impression that, like, people don't necessarily think of Italy in that same vein, but perhaps that's changing a little bit. Like it seems like with this rule, for example, Italy is wanting to attract that same type of person. And do you agree that they're actually like craving that a little bit, or is there some ulterior motive here that I'm not really seeing?
I would say that they are playing at the same table, but Portugal is playing unfair with rules and with marketing in general. I'm going to go into details with your permission.
Yeah, however you want to take
let's say that our economy, like every country's economy, is based on financial stuff. So it's based on how much you can get, how much you can save, and how little you're going to spend, like any business. And of course, foreigners and taxpayers in general are the core of the revenues for a country. 90% off is a no-brainer. Okay, you cannot beat that because it potentially could be based on the worldwide income you may incur, not just on the Italian source of income. So it could be applied on employment income and also as a freelancer. So if you want to start a business, that could boost your business at the beginning because you would pay taxes just on 1/10. Also, if you start a business here in Italy, there is an alternative tax that goes by the name of flat 5%. So you pay 5% just on your gross for the first 5 years. No one can beat that.
Wow.
At the same time, there is something that Italy keeps talking about. I don't know if it's good or bad for the marketing campaign, But they keep on saying that the Italian bureaucracy is like a maze. Once you're in, you cannot get out of that.
Yeah.
Also, rules keep on changing. Yes, that's for sure. But once you're on the boat, no one can kick you out. You can enjoy the benefit as long as it was meant to be. I want to give some, insurance or, oh yeah, I can say that insurance against picking the wrong decision about moving to Portugal or Italy or any tax haven in general. The biggest problem doesn't come from the new country that you move into. It comes when the old country that you left is claiming some taxes for your income. Because there is, nowadays, you can take a look, okay? I don't want to spoil anything. Probably I'm getting too complicated and too annoying about that. There are the so-called common reporting standards. What does it mean? For the people that are in US, it's more or less the FATCA obligations. Let's say that every December 31st, when you almost drunk, okay, when you're younger, of course, I'm getting old. When you're almost young and you're popping the cork with your friends, with your relatives, whoever, these countries, I'm talking about more than 200 countries, share personal information about taxpayers from all over the world. Mm-hmm. They really know how much you have. They really know how much you're making. So what happens if you move to Portugal? Okay, I'm not saying Italy because I party for Italy. You move to Portugal, and after 5 years, you get a letter from the whole country that you moved from.
What does happen? What you owe? I mean, that's the thing, though. I mean, especially I'm speaking, specifically about the U.S. and sorry for everyone else from around the world that doesn't apply to. But I think it does. Like this is just an example that can apply from anywhere. I mean, they will come calling and say, "You've owed taxes here the whole time, and you didn't file. At the minimum, you had to file and share that information."
Yeah. So the missing piece, like everywhere, not just in Italy, Portugal, is, okay, let's say that Portugal is, there to promise me a 5% flat tax forever. But what if I read that rule through the lens of the tax agreement? What happens with and for the US citizens? What happens even for the Italian citizens? There are always complications, there are always side effects that depends on your fiscal situation. So you have to collect information both sides, not just to the destinations one.
Yeah, absolutely. This is phenomenal. I'm learning so much. That the compounding effect is multiplying quickly. I wanted to return to something you said earlier, which I already knew the answer to, so I might have skipped past it without allowing us to elaborate for anybody who wasn't. So you talked about that extension. So let's pretend in our scenario so far we've moved past the application, and we've now been living in Italy for 5 years, which is how long this what do we call it? Do we call it a rule or exemption, or what word do you use?
Let's call it benefit.
Benefit. That's better. So we've had this benefit for 5 years, but it expires. But there's the opportunity to extend it up to another 5 years. So you mentioned the baby in the house. Let's elaborate on that a little bit.
Well, they give you the opportunity to get the extension, but once again, it's a give and get. They give you the opportunity, but then they want some commitment from you. So you have to stay here for 5 years plus. You have to get, someone with you like a baby, or you can have a baby once you're here, or you can buy a property. Either way, there is something that I would like to put very clear for all the listeners. You don't have to file anything prior. Okay, there is no exam that you have to pass. There is no paperwork to file. You get the confirmation of the benefit. You get the confirmation of the fact that you get the extension just by filing your taxes the following year. So
that's good to know.
Relax and take your time.
So you could, in theory, for example, you could get to your 5 years and be like, okay, I've been here for exactly 5 years. During this 6th year, we're having a baby or we're buying a house. And if I do one of those two things,
take your time. You can play with time a lot. I know a lot of people are concerned about the 103 days rule. That's probably one of the most common mistakes that a lot of people do. But time is on your side.
Can you elaborate on that for anybody that might not know what you mean by the 183 days rule?
Okay, every country has its own regulation, its own assumption to claim you as a tax resident or not. Let's put it down in a romantic way. After a few dates, the girlfriend is telling you that you are made to live for life together. That's a huge commitment, isn't it?
It happens, but yeah.
Yeah, it happens. It happened to me before. What happens is you have to be 100% sure that that's the choice that you truly want to make. So they make assumptions. Listen carefully. This is the word. If you take a deep dive about the articles of each tax treaty, of each tax code of every country, they say one individual is considered. Why they use that information? Because if you spend, let's say Italy, okay, for example, if you spend more than 183 days in our country, you're considered a tax resident. Or shifting to the eyes of the Italian Revenue Agency, they consider you as a tax resident. It's an assumption. Why I keep using this word assumption? Because you can prove otherwise. And the right to prove otherwise is not taken from, some articles or some from guys speaking around thinking like they have the magic power. It's taken from the tax agreement between those 200 countries. Remember, we discussed about that. And on Article 4, Point 2 of the tax agreement that they signed decades ago, I was a kid when they signed it, they say that regardless the local regulation, so it could be 183 days, it could be 100 days, what really matters is the center of your life, the center of your interest. Remember that, guys. That could change everything for your tax planning.
It absolutely can. That's a really, really good point. I think a lot of us are caught up on the, like, if you're doing the math, if you're hearing about this for the first time, 183 days is essentially right over half the year. So it's the general rule there is if you're in a country for more than half the year, then that becomes your tax residency. In reality, as someone may be able to hold you to that, but in reality, what they really want to know is like, where's the center of your life? It's presumed that if you're somewhere for more than 6 months out of the year, then that is where the center of your life is. And in fact, some visas will require you to be in a place for 183 days. Like, we'll give you this visa, but you have to make this the center of your life. This is the trade-off that they're giving you, and then therefore you become, a tax resident of that place. But as Paolo's correctly pointing out, like, what they really want to know is like, where does your life live? And if where that life lives, you should be paying taxes. And so I don't know if a tax professional would say there's some gray area there or not. That might be incorrect to put out into the airwaves. But in practice, that's what I've witnessed a little bit as well. There's not somebody like counting your 183 days, and on the 183rd day, they hit you with a tax bill.
It never happens. But it may happen for you to become a celebrity. Like, I don't know if a lot of you already read something about Shakira's tax trial, owning something like $16 million to the Spanish Revenue Agency. Let's say it may happen for you to have the center of your life in place A and then consider tax resident place B.
Yeah.
That's when you have to hire someone good to take care about your case study.
Great to know. That's a wonderful point. And the Shakira thing is really interesting. Living in Spain, I found that pretty interesting and timely. Okay, last question or last clarifying point. So we get to 10 years. We've extended this thing out as long as we can go, and now I'm in my 10th year, and but I really am loving my life in Italy. I've established myself there, and I plan to stay. Does a switch flip, and I suddenly jump up into the 60% with the rest of the population?
I would ask you twice, are you sure you want to stay?
The answer to your question might have some bearing on that.
I would say that tax-wise, Italy would be the worst choice ever within the European Union because the tax pressure is insane.
Yeah. That's kind of what I assumed. And I think that's why this conversation is so interesting, because that is the stereotype. For people, if you just don't know any better, you would think, oh my God, Italy's amazing to visit. I wish I could live there, but the bureaucracy and the high taxes make it very challenging. And a lot of people just say, well, that's fine, but it's an amazing place to live. One of the most famous places in the world to visit. And why would I not want to make that the center of my universe? And so you skip past that and you say, okay, I'm willing to deal with those things. But that's good to know. Like, get your 10 years, and then you might have to start dealing with some of those challenges. On the plus side, you got to deal with you got 10 years of 10 to 30%, and that was pretty good.
Let's say that back to dating. I think that after 10 years of dating, you may have a clear idea if this girl is meant to be your wife or not. Do you agree with me?
Yeah. I think that's sufficient time. It's almost how much time I took before proposing and getting married. So okay. I guess I'm in line with that. That's great. Okay, this is super helpful. Do you feel like I missed anything? Are there any glaring questions that like I haven't asked or that would be good to shed some more light on?
Well, I would like to put it down like a marketing campaign. I will give you one good reason to leave and one good reason to stay. How's it sound to you?
Excellent.
One good reason for living. Well, here in Italy, we have the so hated wealth tax. Basically, you pay taxes on everything you have abroad. And by the way, it's a fixed percentage. So, despite what other people say, you have to pay twice as much. Period. It's pretty unfair. You pay 26% on dividends. You pay 0.2% on investments account. You pay 0.76% on real estate. But in this case, you can offset property taxes paid elsewhere. I heard that U.S. property taxes are impressive, so more likely you don't have to pay the difference. But in general, the worldwide principle can kill you.
And is this something to be concerned with while you're taking advantage of this benefit we've discussed today, or this comes after?
Well, it comes within the same planning. Because if you have some assets, I'm not talking about for those who come from the US, I'm talking about, for example, IRA or the 401k retirement accounts. Those are considered tax-free, okay? Don't worry.
Okay.
Retirement accounts in general here in Italy are not taxable. But you have to play with all kinds of taxes, not just personal taxes, but also financial taxes and property taxes. Because when you work on your, cash flow as a family member or as an individual, you have to understand what your net is, because the net is what you're going to base your Italian life on.
So let's say, for example, a lot of people I know, they own a rental property back home. That used to be their home. They're lived abroad. They're moving abroad now. And so they're renting out their home back home.
Okay.
So there's two different things. I guess you've got property, and then you've got additional income tax from that asset. So how would you view that?
I would love that.
You like this?
I like this. I'm telling you the reason why. Of course, I'm not insane. Because first of all, you can offset all the property taxes paid elsewhere. Okay. And I have a good feeling that most of the cases that the property taxes elsewhere or overseas, in this case, can overcover the property taxes to pay here in Italy. And by the way, regarding the income tax on the rental income, we have to take a look about the tax basis. I'm getting a little bit technical. I hope you don't mind.
No, I asked for it.
When we read numbers, foreign numbers, we have to translate those numbers into Italian numbers because we have to apply the Italian tax agreement. What might be taxable in the US could be tax-free here in Italy. And otherwise, something that is considered tax-free in the US could be taxable here in Italy. What happens is very often the taxable income in the US is the same of your Italian ones. So in other words, you can offset, let's say, condo fees, energy efficiency cost, bills, energy bills. So whatever is able to reduce the tax basis in the US can be also used in Italy. If you already paid income taxes there, you know what happens? More likely you don't have to pay a thing here. That's the best scenario ever.
And I think perhaps even better, correct me if I'm wrong, but like if you're, let's say we go back to Palermo in Sicily and you're paying 10% on your income. So only 10% of your total income is taxable. If that is part of your income, then...
on your personal income, not a rental income.
Not on rental income. Okay. So we separate these. Good to know.
Yeah. That's why I keep on saying it depends.
It depends
on the kind of income.
A caveat to this entire conversation: it depends.
Fantastic. One reason to stay, a very simple one. Of course, everyone knows Italy. The reason for is, food, weather, people, whatever adds on mind. Let's play with taxes. Here, if you're a brand new taxpayer, it's plenty of alternatives. That's the key word. There is no straightforward answer. There is no one-fits-all plan. You can play with numbers. You can play with different tax regimes. If you are a business owner, you can opt for a couple of tax regimes. Mm-hmm. When you have options, guess what happens? You have the right. If you have the knowledge, you can pick the best for you.
Being empowered with the knowledge is a key if there that we want to preach to everyone. If you're considering moving abroad or spending significant time in any country outside of your home country, please take the time to educate yourself on this beforehand, or at least during the initial stages of that. Don't wait until you're years in and try to figure it out then. It's important. It doesn't have to be the main thing. Like I've had some conversations with people where they say, I don't want to base where I live on, just on taxes or trying to save money. And I would agree, like that's not what this is all about. But there's a spectrum of decisions you have to make when you're going to any place, when you're taking any job, when you're making any major decision in life, and it pays to be informed. And this is the reality. They say, death and taxes are your two guarantees in life. So it's absolutely something worth discussing. And I learned a ton from this, Paolo. Like I thought I knew a little bit already, but I really didn't. This was really, really helpful for me, and I'm assuming for everybody listening as well. So yeah, thank you so much.
Well, thank you for having me. And if I can share something valuable to you, I was reading a book a few years ago before meeting with my wife, and it was the Decisions book. So basically someone telling you what is the best way to make decisions. And after that, I realized what my mission could be like. And this is why I call myself a creative numbers man. Mm. So my mission now as a CEO, as an educator, because also we teach expats, is to teach people how to make a living, as you just said, balancing money and happiness. And every choice is unique.
It's a beautiful way to approach these things. It doesn't have to be just about the line items in the balance sheet, but there's a reason for all of that. This is a means to an end, and it's about living a sweeter life. And I think that's what a lot of people the type of people that listen to this show. The type of people I encounter who are making these moves, they're seeking a better balance in all forms of life, however they define that. It's different for everyone. And so I really like that approach that you guys are taking. And, if I also want to give you the chance now to, list any links, any places where people can come to find out more. I'll place all those in the show notes as well, so people can access you quickly. But they may want to get in touch, just ask more questions or learn more. So that would be great.
Well, I'm usually the one making questions. I don't mind for a little bit. They can just Google it, Studio Rigo. It's the name of the tax firm, or just go on YouTube and do the same, Studio Rigo. You will find out what happens.
I can tell you, I follow you on social media, and you guys put out some very useful content there as well. So you'll get all the access to whatever your social media platforms are of choice. There's a lot there as well. So definitely would recommend from that standpoint. Paolo, thank you so much. Really appreciate it, and I've learned a ton and just enjoyed chatting with you. Next time we'll just talk about all the greatness that Italy is, and we'll set numbers to the side for just a little bit. But this was awesome for this conversation.
It's been my pleasure. Thank you again.
Thanks for tuning in today from wherever you are in the world. Once again, I'm Chase, and this has been another episode of About Abroad. For those of you wondering how you can best support the show, I have made it super simple for you. Just go over to the show notes of the episode that you just finished listening to and click on one of the two following links. aboutabroad.com/newsletter to get our monthly newsletter, no spam, guaranteed, or ratethispodcast.com/aboutabroad, where you can quickly and easily leave a review for the show. It's not just important to me, it also helps more wanderers just like you find us. Finally, don't forget to subscribe on your podcast platform of choice, and we will see you again next week. Thanks again. Hasta luego, amigos.